Welcome, everyone, and thank you for joining us today for this webinar on overseeing local assessment operations. We have a big crowd today, a very popular topic with over 280 folks signed up to attend, so welcome all. I'd like to introduce myself. I'm Jeremy Marcet, and will be serving as your moderator today. I'm currently the town administrator for the town of Sherburne. I serve as the chair of the MMA Public Works, Transportation, and Utilities Policy Committee. In previous roles, I was the chair of the Town of Medfield's Warrant Committee and sat on the executive committee of the Massachusetts Association of Town Finance Committees. I'm honored to introduce you to our speaker, who I'll hand things over to shortly. Christopher Wilcock is the Bureau Chief of the Local Assessment at the Massachusetts Division of Local Services, where he leads efforts to support municipalities in effective property tax administration. With over 2 decades of experience in local government finance and assessment, Christopher has served in key roles across multiple communities, including the City of Salem, Town of Weston, Town of Tewksbury, Town of Wakefield, and the City of Melrose. He has also served as president of the Middlesex County Association of Assessing Officers and president of the Massachusetts Association of Assessing Officers. His expertise in data-driven decision-making, mass appraisal, and local taxation helps municipalities optimize revenue, ensure transparency, and foster public trust. In this discussion, Christopher will highlight how assessors provide value to municipalities by supporting financial stability, economic development, and informed policymaking. Today's presentation will be followed by 25 minutes of questions and answers. Please be reminded that for the Q&A portion of the webinar, you should submit your questions in the QA function located at the bottom of your Zoom screen. Questions should not go into the chat. Closed captioning is available for this webinar and for all MMA webinars. To enable yours, please look at the Zoom toolbar at the bottom of your screen and select Show Captions. You may be prompted to select your preferred language. A recording of today's webinar, along with all slides, will be emailed to all attendees and posted on the MMA website by the end of this week. Later in this event, MMA will post a link to our evaluation for this event into the chat. Please take a moment today to fill it out. Your feedback helps us plan future programs. I'd now like to welcome Christopher to the screen to begin his presentation.
Thank you, Jeremy. Really excited to be here. As you can tell from my past, I was on the other side of the table for over 2 decades as a municipal assessor. I've worked in appointed positions, elected positions, and this presentation today, I think, is geared to explaining at a very high level, what is assessing? What is the assessing function? How are assessing operations kind of changing? What happens kind of day to day? And then big picture things. So this conversation is kind of geared to how I would explain assessing to possibly an elected official, a finance director, a mayor, or a town manager. So again, it's very high level, and more than happy to come back in the future to go into any aspect of assessing. As you'll find out, there's just a lot of things that assessors do across the Commonwealth. So before we kind of get into everything, I just want to take a minute to explain I am from DLS, and we're responsible for ensuring fairness in local property tax. The bureau that I'm part of, we're responsible for regulation, oversight. We provide training and technical assistance to cities and towns. This is not only for assessors, this is also sometimes for finance directors or managers that might experience a vacancy in their community. So again, if you have any questions about valuation information, assessing information, the Bureau of Local Assessment is for all public officials, not just assessors. So typically, when would management see assessors in a typical year? There's almost three times, and we'll start with these first two. So in the winter and spring, during developing a budget and going through just different things around a municipal budget, assessors or the board members would come up to basically present budget items such as personnel, valuation, software, and other items. So typically, the assessor would come out with all other department heads, and managers would see the assessor. They might explain some things that are going on in that jurisdiction that year. But for the most part, they come out as part of the budget process. One of the big times that you'll see them is in the fall for the classification hearings. It's extremely important for any tax policy that's discussed at the fall classification hearings to have solid, fair, and accurate assessments built into them. The assessments are the foundation for tax policy. In order to have a fair and balanced and equitable assessment process, you really need to have a lot of assessing data throughout the year to build up to those final values. But it's crucial to have fair and equitable assessments anytime you're discussing tax policy. And in Massachusetts, that happens in the fall. The third one that is kind of a funny one is growth. Typically a mayor or a town manager, especially a finance director, might reach out to the assessor and say, what is our growth this year? So those are three very common times that managers will reach out to assessors, and sometimes it will be in a public forum, or sometimes it will be just through a conversation or an email. But typically, that's when you see assessors. Other than that, kind of they do their own thing, and they develop, the values, and they work on things. And today we're going to go into those details. We're going to look at other things other than these two or three items. So today kind of is structured very high level, but these are some of the basic things that we'll be talking about. What is assessing in Massachusetts? What are the functions of municipal assessment? What is mass appraisal? During a fiscal year, what certain things happen in assessing offices? And the last thing we'll talk about is just the variance of just assessing staff throughout the Commonwealth. So looking at Mass General laws, this is probably the most shared assessing Mass General law, because what it does is it established what is taxable. So a lot of times when we receive questions from cities and towns, they almost go to the exempt. This must be exempt. But if you look at Mass General Laws, Chapter 59, Section 2, what it does is it says everything is taxable unless expressed exempt. So you start out with the basis of everything's taxable, and the assessors actually have a process that they know certain sections of the law, and based on our guidance, they can kind of go through and look at what's exempt to remove that off of the tax roll. Fast forward to Mass General Law and kind of how we take Mass General laws and provide guidance to elected officials and assessors. This is kind of what we say as far as the course 101, which is a course provided by DLS for mainly assessors, but open to anyone. If anyone from the finance director or a mayor or manager wants to take the 101, we can set that up for anyone to kind of go the next level. But right out of those books, this is what they say assessors do. They prepare an annual tax property roll. They maintain an extensive database, and basically they have down to each parcel who the owner is, what the use is, the value, and a lot of other things that produce the fair market value for all property in this jurisdiction every year. So every year, the assessors are tasked with maintaining the ownership, classification, the use, and then the valuation of all property. So before coming to DLS, I had a lot of questions, and some of these are slowly getting answered as we kind of compile all the data that we have at DLS. But if I was explaining Massachusetts assessing with just these numbers, these are just some very interesting things. So in the state, we have 351 cities and towns. In total, we have 2.6 million annual valuations. So that's for personal property, that's for real property. Those are done by assessors in the offices. In total, we have $1.9 trillion in assessed value across the Commonwealth that brings in $22 billion in annual tax levies. The work of this is done by over 1,700 assessing professionals that are listed in Gateway, and I believe that number is higher, possibly clerical staff or maybe assistant assessors aren't in Gateway, but as of yesterday, it was 1,700 assessing personnel across the Commonwealth. And at the Bureau of Local Assessment, we have 17 assessing professionals that help the assessors and public officials with roughly 30 different communities each. So we have 12 dedicated advisors and supervisors that have assignments. We have 4 project managers and myself as far as a manager of the overall bureau, but we have 17 people to help out the 1,700 assessors. Both of us, the assessors and part of our process, we review an average of 114,000 property sales that lead to the valuation. So we receive 114,000 annual sales of property in Massachusetts. And one of the new metrics that we have, and this by no means is exact, we're trying to refine it, but in Massachusetts, over $90 million is spent annually, and this is based off of 2024 on the assessing function. So that would include salary, wages, pretty much everything that's reported to us for fiscal year 2024. That's a lot of money. So this is assessing by the numbers. So just to recap, what is assessing in Massachusetts? 100% full and fair cash value for all property every year. Certifications, which happen every 5 years. So that's a kind of an audit of your assessing system. If you're planning budgets, a typical certification year, you usually bring in some additional staff, whether it's a vendor or some people that help with complex valuations. That happens every 5 years. There's roughly 70 communities that are in CERT every year that the staff at BLA is working with. Assessments are done by municipalities, in-house or contracted out. So all the assessment development is not done by the state. It's actually done by the municipalities. And then the final values before being submitted to us are reviewed by the Board of Assessors. Whether you have in-house or whether you have a contractor that does your assessments, the Board of Assessors is responsible for signing all the paperwork and submitting that into Gateway for annual assessments. We did receive a question as far as any, if someone discovers that there's an error with assessing, there's an abatement process that's in place if they receive that on their bill. So there are abatements that you can issue. Once you're past that, the change in value would be put in for the following year. So there would be an inspection, but we strongly suggest that all of that is flushed out through the abatement process and that the records are as accurate as possible. So now we're going to get into a little of the functions of the office. And when you look at assessing, a lot of people look at the valuation side of it, but you cannot build values based on data or anything that's in a system that produces valuation that's not thoroughly gone through. So some of these items are geared to the valuation process. Some of them are things that happen in the office that you might not be aware of. So just the general administration of an office, just the general administration of municipal government, kind of those types of things could be 15% of a typical office as far as time. Data entry, whether it's forms coming in, whether it's inspections in the field, there's a lot of data entry. Assessors are constantly sending out forms and then going out in the field to verify things. So there's a lot of time that's spent on annual data entry to either go into the financial system for things like exemptions or into the assessment system for valuations. Roughly 15% of the time could be spent with in-house inspections or field work that's done by a contractor. So assessors should be out in the field. You can't value things that you don't know are out there. So for instance, if there's a new house that's being built, the assessor or someone's going to be tasked with going out there to validate what's in the field, measure and list it, and bring that information back. Taxpayer education. I think anyone that's been in city or town halls, try to explain Prop 2.5. Try to explain the tax assessment process or the abatement process or exemptions. Assessors spend a lot of time educating taxpayers to find answers or to understand how taxation works in their jurisdiction. From time to time, assessors receive taxpayer inquiries. Print this field card. I need a copy of the map, a butters list. There's a lot of those inquiries that are done in the assessing function in the assessing office. From there, over to the right, assessing education. There are so many things that are changing as far as personal property, real property. Some of the examples are any of the advancements in renewables. So things like battery storage facilities, windmills, solar, some of these Amazon or large warehouses. Those are fairly new in the last few years. So assessors are tasked with the valuation of those types of properties. So the education for assessors really never ends because things are constantly changing. 10% of their overall time could be spent on statistical analysis, and that could be ongoing from every time they receive deeds from the Registry of Deeds. So they're putting them in the system, but they're also looking at specific stats in preparation for valuations. And then, the last component is valuation. And the old adage of, garbage in, garbage out, as far as the old computers, that could be said for bad data in, bad valuations out. So valuation is kind of the end result of good practices that happen in an assessing office. And there's a lot of time and resources that go into the work before you get good valuations. So some of the examples of field work, I thought it would be helpful to kind of break down field work. Is it just going out to look at new inspections? Is it just to go out and look at abatements as they happen? Absolutely not. So there is a requirement that every property in your jurisdiction is inspected once every 10 years. Instead of doing that all at once and having this huge contract to do it, some of the common ways of keeping up with that are to have 10% of the parcels done each year. You can go out to your permits, you can go out to your sales, you can go out to your appeals, and what's left over is a small percentage of parcels that had no activity that you can do. But cyclical inspections are very common to go out, sales visits, permits. If anyone's in the western part of the state or has farming, Chapter 61 requires that the parcels are still in use. If they say that they're agricultural, that the assessor's verifying that they're not using it for something else, because there is a heavy discount for agricultural purposes. Personal property is inspected every 5 years. So what businesses have come in or out. Sometimes it's for second home personal property. So personal property is very active as far as inspections and also grade studies. From time to time, building grades and neighborhoods change over. So it's important for assessors to validate what they have for the assessments based on the grade of construction. So things like grade studies are ongoing, and assessors go out into the field to perform those tasks. So one of the questions we received is, are municipalities required to do a full measure and list of assessments every 10 years? Yes, that is the requirement. It's a cyclical requirement. It's been in the law for a long time. That's just to make sure that unpermitted work or possibly wrong changes in the assessment system are thoroughly reviewed in a 10-year cycle. It is very common for assessors to split that into every year. And in some communities, the last community I was in, our requirement might have been 10 or 1,200 parcels a year. When I just went to review sales and permits, that was roughly 800 inspections a year. So I would only have to do a small percentage of cyclical to keep up with that 10-year cycle. So there's a lot of creative ways to keep up with that. The whole full measure and list once every 10 years is becoming less and less. Assessors are looking to maximize growth and ensure accurate data. Therefore, they are going to the 10% a year way of doing cyclicals. Okay, just bear with me 1 second. Okay. So the next thing I want to discuss is kind of just the classes of property. This is going to be very high level. So the biggest impact on the management side is certain classes of property trigger a different tax rate or tax policy. So for the most part, residential and open space are considered a residential tax rate. So if your community looks to shift the tax burden in the classification hearing, they're looking at values from class 3, which is commercial, industrial, which is class 4, and personal property, which is class 5. And I thought just to tie this in, there's going to be examples of what's included. So for instance, office space is commercial, warehouses or manufacturing is industrial, personal property is second homes, business tangible assets, telephone, personal property, and utilities. So those are class 5. But the very high end picture is class 3 to 5 has a commercial tax rate applied to it if there is that local shift at the classification hearing, where residential and open space would not have the commercial rate. It would be taxed at a commercial, industrial, and personal property rate as decided by the elected officials. Okay, so as far as the next item, I think it's very important for us to just understand the differences in mass appraisal and single property appraisal. So, for instance, the assessors are not tasked with going to each residence, getting 3 comps annually, and providing an individual assessment for each property. So, if you were to purchase a house and you had a mortgage company, they might hire an appraiser to go out to your property. They might pull 3 or 5 comps of similar properties or sales that happened to produce a value on your property. So when you look at the assessing operations, what we do as far as assessing is called mass appraisal. So what you're doing is you're valuing the whole city or town based on a computer-driven model that adjusts all values that are built on tables. So you're not going individually to 1 Main Street, 2 Main Street, and producing all these individual values. You're creating a land schedule, you're creating building tables, and what you're doing is you're creating valuations for the whole jurisdiction. So I thought it was extremely important, especially just looking at, the frequency of going to houses. And as you saw from the couple slides ago, it's once every 10 years. If you're looking at single appraisals, that appraiser is going to that house every time they do the appraisal. So we don't have the staff or the resources or the budget to do that type of appraisal. Sometimes assessors will do that if there's a pending court case or if they have a special use property, but everything is in a mass appraisal model. And that's what's tested. That's why the sales are extremely important. Getting income information every year. What they're doing is they're market adjusting that model every year, providing those sales and other information to us to validate that model. And that model is generating the values for all uses and all property in that jurisdiction. So it's not one parcel, it's the whole jurisdiction. Okay, a very easy answer for one of the questions that came up. How do you determine what's a second home? So it's easy in communities that have a lot of second homes. So whether it's the Cape or out in the western part of the state, there are vacation communities. And the assessors look at ownership records and send forms out to people that might maintain a mailing address outside the jurisdiction. So that's part of the assessing function, is to identify, you know, are there second homes, and how do I get that information? So if you want more information about it, I encourage you to reach out to your assessor to find out how they do it. But a common way is looking at ownership records. And as transactions happen, they might identify a house that might have a second home owner, and they might be responsible for paying, second home personal property. So each assessor has their own process, and I would encourage you to reach out to find out what happens in your jurisdiction. Okay. So now that we're going from kind of the assessing office, this is the first attempt to kind of look at the tax rate process. We talked about earlier, the assessors are at the tax classification hearing. That's kind of at the end of the process, but I thought it would be extremely helpful to kind of define just different dates in a tax rate calendar of actual dates that assessors use. So this is all based on a quarterly billing example. This is based off of FY 2025, and these are things that a lot of assessing offices would use this type of calendar. So for FY 25 valuations, they're using actually the last calendar year of sales. So you have to remember the fiscal year starts July 1st, 2024. So there's no way they can use 24 sales, because you only have 6 months before the start of the fiscal year. So they're using calendar year sales for the most part of calendar year 23. So January to December 31st. If they don't have enough sales, the law allows them to use 2 years of sales. But for this example, we're just saying how far back that they can go in a typical year if they had the correct amount of sales. From there, if they are a community that has a January 1st date for growth, that is the date that they're going out to look at all the new developments, to actually put a value on all the new properties that come in. So they're doing inspections, they're working with the building inspector to capture that growth, which helps communities down with the classification hearing and budgeting. So January 1st is one date. There was a local option to allow communities to go to June 30th. That is the Chapter 653 process. So some communities have June 30th. They're allowed to capture growth all the way up. But each community has one of those dates to capture growth. So the assessors will be out in the field looking at percent of completion on the large projects. They'll be working with the building inspectors to get all of the building permits and really fine tuning those growth numbers. So July 1st actually starts the fiscal year. So that's when we start seeing people start submitting things or putting things into Gateway. So that starts July 1st. Value sent to DLS. So a typical time frame for value sent to us could happen anywhere from July 1st, honestly, to later in the year. But for this example, we're saying roughly till October 1st. So somewhere in that time frame. And then from there, once the values are approved, you can start to advertise for your classification hearing, start talking about tax policy. What are the impacts of tax policy? So that, could happen on the 21st of October. If all of that goes through, you have your classification hearing, you get your information into Gateway as far as the recap sheet. It's submitted to the Bureau of Accounts, and they go through their validation. Tax rate realistically could be done by November 1st. And as long as you're a quarterly community, you can work on tax billing to get tax bills out in the mail by the 31st of the year. A few days before, a week before, just making sure you don't go past that. So I think that is extremely important as a manager, just to understand all the different components. If you look at the bottom, I'm not going to go too much into detail, but this is something we did provide at the annual MMA conference this year. And what we defined was what is the tax rate process for both sides, for the cities and towns, and then also from us and Gateway, starting from the first form that's submitted until the approved tax rate. So there's two different types of years: an interim year, which is just a not a cert year, 51 days from tax rate process from one to the end. So submitting your sales in as the first form, receiving an approved tax rate as the last form. If you're a certification year, just think of an audit year as far as the assessment side, that's roughly 66 days. So looking at this, graphic at the bottom, this is based on week of the year. 51 days doesn't allow a lot of time if you're submitting things in December. So that's the difference of kind of the color coding of the weeks. What we're trying to do is get things moved up. But those are the two metrics that we kind of developed this year, and we're still working on refining those and sharing those with managers and public officials. Okay, so this for me is probably the most important slide here. Any assessors, and I did see a sampling of who's in the meeting. Any assessors, this stuff does resonate. But going back to that first slide, when we look at three of the most common times that you see assessors in a city or town hall, asking growth questions, a certification or a classification hearing, or a budget hearing. Those are the three times you usually see assessors. So what's happening? The assessing office, in my opinion, was always moving. As we finished one process, another one came. So we're constantly just moving. There's a lot of deed transactions that come in every month. There's auto excise that comes in every month. So there's a lot of things that happen either every day, every week, or every month that are kind of routine. But what I wanted to do is put together just an overall calendar and just kind of talk about some of these items. So starting in January, anyone with quarterly bills, that go out, or you send your third quarter bill out, it opens up the abatement season. It's the first time the taxpayer sees the actual tax bill, the final assessment. So in January, most assessors' offices are waiting for any appeals that come in. Maybe there's questions. Maybe someone in a community just didn't realize how expensive certain real estate has gotten over the years. So there is a lot of sticker shock as far as people reaching out in January. Just think, in a medium-sized community with 10,000 parcels, you're sending a tax bill that's probably one of their largest bills that they receive. You're sending that out in January, and there's a value associated for that property on it. So sometimes in January, it's not so much they want to appeal, but it's they want to understand the assessment process. There's a lot of questions. What's my neighbor's property worth? How did you arrive at this? Where can I check up on things? So abatements in January are sometimes filed, and sometimes it's just explaining the process, and people don't fill out appeals. But it's pretty busy when you send 10,000 tax bills out in 1 month or 1 day, and there's a lot of opinions of values. So that's a very busy season. That January month is also used for sending out annual forms, whether it's done at the end of the month or throughout the month. So things like income and expense forms are sent out to commercial properties and income generating properties. Forms of list are sent out to personal property accounts. And then there's other forms that are going out. In February, I think once the abatement period has stopped, which usually is the first day or the first couple of days in February, assessors are scheduling inspections. So just because they received, a certain amount of abatements, they don't just act on them. They have to go out in the field and verify, do we have something wrong with the field card? Is there, something happening? So there is a inspection that's usually done for abatement properties, and that does happen in February. Abatement hearings are held. So the Board of Assessors, could come in and schedule meetings. The office could be preparing for those meetings. So printing out field cards, printing out maps, printing out a lot of the applications for abatement. So they're really gearing up in February. Sometimes it starts in January and spills over February. Sometimes it goes into March. But they're really, really getting ramped up to hear all those and go through all the abatements. So while that's going on, at the end of February, early March, commitment one of motor vehicles go out. Motor vehicles is one of the largest receivables outside property taxation that's sent out from a jurisdiction. So in March, people receive, in a mid-sized community, it's not unheard of to send out 20,000 bills for motor vehicle. If they have a question about what's on the bill, if they want to abate it, that comes into the assessing office as far as a process to go through it, to provide relief if it's warranted, or again, explaining what is motor vehicle, why am I getting this bill, how did you calculate the value? All those things are answered by assessors or assessing staff. Personal properties in March, the forms the list. The deadline is in March, so they're starting to go through developing personal property values and going through those forms. In April, the weather's turning most years, so they're starting to go out in the field to start looking at inspections. Maybe that stopped over the winter with snow. In May, they're typically getting ready for budgets. So that might be a couple months earlier in some some communities, but they're developing what's needed. Maybe there's a certification coming up, so they need some extra funds for that. In June, they're looking to kind of wrap up the year. So they're working on anything that's kind of outstanding, preparing for the new fiscal year, still doing inspections. In July, you start to send out some forms for personal exemption. So all your veterans forms, your exemptions for elderly, a lot of those forms are starting to either be processed or sent out in July. In Gateway, they're working on the local official directory and validation for assessors meeting education requirements for the 101 course and other things. From there into August, there are a lot of educational events for assessors. They're still kind of doing field work, maybe working on values, but I believe their annual school is right around the August month. September, they're starting to submit values into Gateway and really start to prepare for that. Once the values are approved, that's really in October. So they're starting to work on, things like the classification hearing. That could be in October or November, depending on the jurisdiction. Additional things in November, they're working on kind of, getting that recap submission, getting the final approval on the tax rate, which allows them to prepare the bills in December. There's a lot of items in between here. There's a lot of things that are monthly that they work on. Things like, auto excise abatements are all year, not just the first commitment. So deeds happen all year. Inspections, for the most part, could happen all year. Usually in the winter, they don't go out as much as the better times of year for weather. But these are some of that very high items that are working on, that assessors are working on in their office. So whether you're a community that has one person for the whole assessing function, so one person is the clerk, they're also the assessor, they're also the board. There are communities based on how they have a charter or how they're structured that have one person that does everything. So they are the board, they are the assessor, they're the inspector, they're the clerk, they do everything. All the way up to kind of our largest type of structure, which would be the city of Boston that, as of yesterday, I think had over 60 people registered under assessing in Gateway. And I'm sure they have other people in the office that are not in Gateway, but that's kind of the extreme. These are all the things that assessing staff have to do. Whether it's an elected appointed board, whether you just have a clerk and a board, there's all different types of combinations. But the assessing function really has to ensure that values are done annually and they're done and developed by the municipality. Even if you have a vendor, you still have that board of assessors that should be providing some kind of oversight of their work. You should conduct inspections. So if you're a single assessor or you have 60 people, you are responsible for, every 10 years, all the property has to be done. You have to participate in the tax rate process. Someone from assessing has to participate. You need to establish an overlay and determine if there's any surplus. You have to administer things like motor vehicle excise, boat excise, and farm excise. You have to prepare the valuation and commitment list statutorily. You have to process any abatements and any exemption applications. And you have to meet all the guidelines that we require at DLS. There's many, many more things that I didn't list here, but just because you have one person and you have a small office, you still have to do all these items. We're looking at the assessing function. So we're going to try and provide some more guidance. I think this was a great opportunity to kind of explain this. One takeaway that I really want to, give to managers and even assessors is here's some things for optimizing your assessing office. Know your assessor. Who's in that office? How is it structured? Is it everything done by one person? Have them explain the valuation. We received a question earlier about second homes. That's a great question for your assessor. How do you ensure that people that move into the jurisdiction that buy second homes receive the personal property? How does that process work? What types of properties do we have in our community? What are the hardest ones to value? Very high level. Assessors love going into the details. I would caution, start at a very high level. Understanding the assessment process, going back to that schedule, at least the tax rate process. Each one of these metrics or each one of these steps have to be hit in order to get timely tax bills out. You do not want to send tax bills out late. You want to make sure that everything's followed. And that is kind of a management responsibility to make sure that each department knows what they have to do in that whole process. The assessors are part of it. There's other departments that are involved in it. And the end result is you get to send out tax bills. So just understanding what's needed in a realistic timeline, I think is something good. Provide opportunities for assessors to get trained. We have the 101 course. I think it's a great course, not only for assessors, but maybe for some managers and other professionals in municipalities. There is so much more to that. That is the very basic foundation of what assessing training is. You can encourage your assessors to be part of, regional organizations. So maybe your county has an assessing association. There's a state level. There's a national assessing association. They provide a lot of educational programs for assessors, way higher than the 101. They have, courses just geared to, commercial valuation. Or types of commercial valuation. So just knowing what's out there and keeping assessors educated is huge. Encouraging them to talk to their peers. As I showed you, there was 1,700 assessing professionals in the state. There is not one person that is an expert at all assessing. It just does not exist. So by, reaching out, identifying peers, someone might be really good at personal property. If a question comes up, they can reach out to one of their peers to help them. It's a free phone call. What they encounter in that jurisdiction probably has been encountered in other jurisdictions. And that institutional knowledge is really valuable, especially when your assessor does not have it. So being comfortable to reach out to other assessors, maximizing your growth by going every year to 10% of the parcels, going to all the permits. You are making sure that you're not leaving any growth out there to be captured, 9 years from now, that you're getting all of that growth as it happens. So going out to the parcels once, at least 10% going to sales and to permits, I think is just a really good practice. Create a calendar of the tax process for your community, not anything that we have, based on a realistic timeline that meets all of your specific tax policy things. So if you have residential exemptions, if you have certain things that could delay time as far as the tax rate process, you're going to be slightly different than your peers. So developing one that works for all the programs and all the staff and all the functions that you have in your community is probably best than picking a best practice for someone that might not have those options. Submit your values early. I think this is something that my team and my staff would definitely say. Things come up through the valuation process where the first draft is not good enough. If you're submitting things extremely late, there is not that time to correct it. The chance of running into estimated bills or late tax bills is high if it's not submitted timely. My staff is dedicated to work with communities, public officials, especially assessors, to get it fixed, to get it across the finish line. But if you're giving us the values and not enough time to get it done, we cannot provide that high level of service. So submitting early, if something comes up, you're more likely to have it fixed and not have any estimated or late tax bills. Lastly, build up your web pages. The most common questions that you get for assessing should be answered on your assessing web page. As far as complex explanations like what is Prop 2.5, steal, borrow, embed, a lot of the videos that we have, DLS has a whole robust inventory of YouTube videos that take, what is Prop 2.5 and explain it in 5 minutes. That is a skill set that I don't have that you can borrow. So one of the best practices is to take a DLS video and embed it on yours to explain some of these complex assessing or complex Prop 2.5 kind of concepts. We encourage that. So these are some tips to optimize municipal assessing operations. Lastly, what I want to really lead you with is, having a balance of assessing operations helps out with, things that are linked to assessing. So by having assessing operations and having someone that's, an office that's proficient in administering assessing functions, that provides fair and equitable assessments for all properties annually, and that has the values that are based on good and tested data in that assessing office, really is going to be helpful if there are any major changes that are linked to tax policy, whether it's exemptions or other things, whether it's Prop 2.5 votes, things like overrides, debt exclusions, or just in general, taxpayer trust. In order to have all three of those items really preserved, you really have to have, fair and equitable assessments and a really good, assessing function in your municipality. And that sometimes is hard to get to. How do I ensure, proficient administration? I think the first step is working with your assessor, just at a high level, identify what is assessing in your community, coming up with calendars, and then understanding any pain points. I really think that, working with the assessor, they're more than happy to provide that insight. So if you do go for, Prop 2.5 vote down the line, the people in the community, the taxpayers, aren't finding, assessments that haven't been keeping up with market values, or they're not getting the right explanations in the assessing office on how the assessment process works. All of this is crucial for the big picture. And I just want to kind of elaborate that. I really appreciate, the time working on this presentation and explaining this. And over my career, this is a conversation that I would have had, again, with a finance director, a mayor, a manager, or an elected official. So I appreciate the opportunity. And at this point, more than happy to open it up for questions.
Great. Thanks, Chris. Great presentation. Very informative. We've got a number of questions lined up here. Remind folks, please put your questions in the Q&A and we'll take them as they come up. If for some reason, there's a lot of great questions. If for some reason we don't get to them, I'm sure Chris would welcome to answer those offline from his contact information. So let's see. With that, let's start with some Q&A. Is it possible to create a digital list that shows all households in a town and a comparison of the tax bills for the last 4 years?
For 30 years?
For the last 4 years. I guess it's a question on how folks might be able to get information to compare how taxes or valuation may have changed on properties over the years.
Great question. So there's two ways to answer that question. One is based on the individual parcel. So each parcel has what's called a property record card. The property record card for most computer systems does track historically. I believe 3 to 5 years is the average. So if you're looking for, one property, you can look at, the history on it. If you're looking for a list of 3 or 4 or 5 years of of assessment data that is available as long as they have a historical file. So there is a permanent record that might reside on the financial system. So for instance, if the financial system had multiple years, you could see that third quarter tax bill that would have the assessment. So you could in theory get it from the financial side, or you could get it from the assessment side. The practice for the office is to maintain a historical database, or somewhere in that database that has as many years going back. Sometimes it's 20 years back, depending on how long that product's been there. So absolutely reach out to your assessor, find out the limitations of what they have, but you should be able to get a list. Then you can apply. You can go to DLS to find out the tax rate history and apply the appropriate tax rate, just in case there's different rates based on different types of property. Going back to that commercial, industrial, they're going to have commercial rates if the tax policy was to shift in that year. If it's a flat rate for everyone, much easier to do it.
Related question, this might be more for a collector's office, but is it possible for someone to break out the portion of a tax bill due to debt exclusions?
Yeah, so it's a great question. So sometimes, well, the debt exclusion actually has, and this, I don't mean to pass the baton, but that it's a BOA question, but I'm going to generally answer it. As long as the amount for the debt exclusion is somewhere in the levy calculation, you can back into a percentage of overall levy that can be applied to the overall tax bill or to the overall rate. So, for instance, if it was 15% of the overall tax levy, you could take the tax rate and say 15%, apply it to the assessed value, and determine what you're paying for that tax policy option, whether it's a debt exclusion or override. So percentage of tax rate would work if that information is available in the levy sheet, which I believe it is.
Great. Thanks, Chris. Next question. What should the assessor's office do if they find that a person has made their single-family home into a duplex without letting anyone know? Guess that might
Uh,
apply to any improvement that's not on the record.
Yeah, so this is why this cyclical inspections are so important. Unpermitted work it's a cat and mouse game as far as assessors trying to find that out. The best way of ensuring that you're capturing it, other neighbors might come in and spill the beans as far as my neighbor has been doing this, that some of that information comes into the office. But I think going out in the field, if you're going to 10 Main Street, you're going to look at the house on this side, you're going to look at the house on that side. You're constantly going to be going out there to kind of look at it. So how that information comes to an assessor typically could be from someone that appeals, that provides that as part of their appeal, that there's unpermitted work that's done. I would argue the best way is to have someone out in the field all the time, and to go out to permits, to go out to abatements. As they go out in the field, they're driving by properties to get to their final destination. In their mind, and this is unfortunately a bad thing about assessing. You can never get it out of your mind. Your mind's always going on valuation. So as you're going to one property, you're constantly looking at all the houses on the street. If there's a dumpster out front, if something looks odd. So in this example, if you see two mailboxes in a neighborhood that has single family houses, that assessor is going to say, when I get back to the office, I'm going to check up on 20 Main Street. There's two mailboxes there. What's going on? So being vigilant, going out in the field, really, really staying out there is important. But you would assess what you see. So assessments are based on what's physically there, not what's legally acceptable. So if someone put in an illegal unit, an assessor is going to put a two-family valuation. They're going to put the finished area in the basement, even though they didn't take a permit out. But if you did not go out in the field and you only relied on permits, you would not know that that was there. And therefore, the tax burden would not be fair for that property compared to their neighbors.
Does the state have rules or guidance for how properties that are in an opt-in overlay district for MBTA communities zoning should be valued? A timely topic.
Very timely. So I'm going to make it just a general statement as far as zoning in general. Zoning does impact the value. We assess on current use, not future use. So for instance, if there was a single family house that's in a commercial district, we don't say the highest and best use for that house is to be, a 5-story office building. We would assess it as a single family house. And that's based on our law. So there's highest and best use, which is usually what the market buys, which means the zoning is different, or different types of zoning for that property could produce a higher assessed value. We do it on current use. So as of the assessment date, that parcel, that person is a single family house, and that's how we value it. So yes, there is expansion of possibilities for highest and best use with new zoning outlet overlays across the Commonwealth. We would still use what's there. So if there's a 3-unit building, but they could build, 30 units there, we have to value it as a 3-unit building, if that makes sense.
That makes sense. Question about the all-important new growth. What are the best practices in forecasting new growth during the budget process? And does DLS have reference resources on the topic?
Yeah, I don't want to steal Sean's thunder, but I think we have an article coming out very soon on new growth. So we have a wealth of information for each community. So in Gateway, we have some forms that have 3-year averages for growth. If you go into our data sets through DARB, there are data sets that go 10 or 20 years back. So for instance, the best practice with growth and estimating it for a budget, you want to know what's behind those numbers. So for instance, using the Amazon warehouse, I think we can all agree that those types of projects don't land in a community every year. That's something that might be a blip. So not only is it going to impact looking 1 year back, it's also going to skew your 3-year average. So, do you want to use it? What's the possibilities of something that large coming? I think everyone is okay with being conservative based on the budget process, using a conservative value for growth. If you go over, I mean, it's a mathematical equation on how that's going to get, moved around in the tax rate process. So having a conservative number based on history, having a conversation with the assessor. There might be things where this is the last year we're getting this type of growth, phasing in of most popular, a large subdivision, maybe hundreds of units. This might be year 5. So if you're looking at a 5-year average and it's all skewed based on a 5-year phasing in of a very large project, the assessor is going to know next year that's not coming. That's not, so again, reaching out to the assessor, using historical information, and kind of just working through it.
Great. And lots of communication between departments and what folks are seeing with land use and the history in the town. Question regarding the second home classification as personal property for a second home. Is that in the same community or a second home in Massachusetts where the primary residence is in another city or even another state?
Yeah. So one thing I promised is I wouldn't pretend to be an attorney by any means. So I'm gonna use the 2 cities, but I guess it could be if it's not your primary dwelling. So personal property tax is exempted for your primary dwelling. So I think even in the same jurisdiction, I will preface this by I'm not an attorney, so definitely vet this. But your primary, so where you live is your primary, so it's exempted. If you have a secondary dwelling that you use for part-time in the year, that would be subject to personal property tax. So something very common, a house on the Cape, a house in the Berkshires, that's not where you record your primary dwelling. You don't have your address for your tax returns, your mailing address for your license. So that second home would be subject to property tax.
Great. There's a question about clarifying the difference between a single property appraisal and mass appraisal.
Yeah.
Does the mass appraisal process preclude having to do single property appraisals?
Yeah, great question. So based on budgets, and I know the answer, so we would not be allowed to raise the budget needed to do individual appraisals on every property. Just using single families and just throwing, numbers out there, it could be $300 to $500 per parcel per year. Just not going to happen. So mass appraisal is not an exact science by any means. It's using a lot of market data to generate that. But yes, you do run into special use properties or properties that are so different than everything else. And I'll use this example. Shopping malls is a perfect example of something that's different than mom and pop type of retail operations. It wouldn't be uncommon for communities to have an appraisal done on special use properties every few years because they will never get the market information to value the North Shore Mall from mom and pop, income and expense forms. It's so different. So some of those special use properties do require appraisals, and we have guidance on that. Sometimes you can reach out to other communities, other communities that have large malls to kind of find out how they're valuing. So there's multiple different ways of doing it. You don't always need an appraisal. You can use a vendor. You can reach out to your peers. You can build up that knowledge. But sometimes special use properties need an actual physical appraisal, and that's when it would be used. And then appeals, sometimes it's helpful to go through that as well. So if you have anything that's pending at the appellate tax board, sometimes those appraisals are warranted just to find out an unbiased opinion to compare against your assessment.
Great. A question regarding the difference between fair cash value and market value.
Same, interchangeable. So a willing seller, willing buyer, open market with traditional financing. So that means if you sell your house, Jeremy, and you only tell me about it, you don't tell anyone else, not a market sale. You sell your house, I give you cash, I don't take a mortgage, not a market sale. So there's multiple reasons, and that's part of our process. When I talked about the 114,000 sales coming in, a large portion of those are coded out for statistical reasons. So if there's a cash buyer, if it's not exposed to the market, if it's distressed. So if I'm going through bankruptcy and I just have to liquidate everything, those are pulled out so that we just look at market. So best way to think of it, willing buyer, willing seller, open market, advertised, traditional financing.
Next here, what's the best way to verify 501c3 classification for building use? How to verify if the property that's under tax exempt owner being leased to a renter user that is not tax exempt?
Yeah. So I again would say go back to your assessors. There's a lot of forms that are submitted every year that that's part of their validation. There's records at the Secretary of State's office as far as how they're set up as a business entity, and then sometimes assessors request additional information. So there's a whole bunch of different ways. Usually when that entity is existing in the community, they've already gone through some kind of process. So I would say the first year that comes in as a possible personal property account, there's a whole process that they go through. We do have some of it in our guidance, but in the past, the Secretary of State's corporate website has been extremely helpful. Sometimes tax documents and the formal list that's filed every year for personal property is also another good source.
Mhm. Under home rule petition, if rent control is put into effect, rent control will probably reduce net operating income and reduce the value of the residential income property, thereby reducing tax yield. Where will the burden be picked up? Will the burden then fall upon the single family and condo owners?
Yeah, I think it depends on that's not only for rent control, that's just based on, the Prop 2.5. So I think it's a good and I won't go too deep into it, but at the end of the day, you have a levy based on, what your receivables are coming in. So anything, other revenue sources other than taxation, you have an annual budget, and what's left over is usually put onto the tax levy based up to the max that you can take in from Prop 2.5. So
Mhm.
in Prop 2.5, and a tax levy, there's a tax burden, and it's usually a percentage. So I am going to answer this at the very high level, just with the five classes. If any of those classes reduce as far as valuation, the other four classes pick up a higher tax burden to make sure that it's at 100%. So, and that could be, based on income coming in, that could be based on the market. Not every property appreciates at the same. Commercial is different than residential. Residential is different than industrial. Then even in the classes, there's differences too. Office is different than hospitality. Hospitality is different than retail. There's all these things happening. The best way to think of this is at the end of the day, you need 100% of that tax levy. So if traditionally it's one thing, one tax class paid 50% of overall tax levy, and based on new assessments, it was reduced to 45%. That 5% would have to be shifted or picked up by someone else in order to get the whole 100% levy.
Great. We're going to continue on question for another 5 minutes or so. We've got a number of more questions, but again, if we don't get to them, feel free to reach out to Chris offline, and I'm sure he's willing to help answer any of your questions. Um, Good question here for us town administrators and town managers. How do most assessing offices staff up their offices for inspections? Is there a suggested ratio for staff to number of parcels?
Yeah, so half of my time, working in jurisdictions, I had to either staff offices, have contractual services. I am going to say to answer this, there is no perfect model. It's what works best. So some communities have what I would call a management level assessing. They're extremely lean on certain positions, and they hire out for things like inspections. Some of the mapping is done, by a vendor. So whatever balance is needed in that community, one of the second to last slides where I listed the office of one compared to the office of 60 plus people, all of those things have to happen. And I think it's a good discussion for what you can afford locally, what is the best thing. I've seen very small offices handle inspections completely in-house. That's either the assessor likes going out there, 50% of their time is in the field. They really like it. Then I've seen assessors say, I want to stay in the office, I want to do more administrative stuff. And we hire out for our inspections to keep up with the cyclical, 10% a year or 100% every 10 years. So I would say, working with your board of assessors and assessing office to find what works best, it can be successful both ways, hired service or in-house.
Here's a related question. If external vendors are used and contracted for evaluations, is there a process for validating the vendor's methodology?
Yeah. I guess the good and bad thing about, assessing vendors is it's such a niche. There's not, you don't open up a page in Google and say, Massachusetts assessing companies, and there's 200 that come out. So there are a lot of established companies that do a majority of the work in the state. But again, that's reaching out to peers. If you're looking at vetting contractors, and it's no different than the town managers do for other contracts in a town, you're going to reach out to your network. That's why, having assessors go to meetings and reaching out to meet people and kind of create those bonds is extremely important because you don't know what you're going to get. So if you're vetting a company and they give you a list of communities they worked in, reaching out to those communities, say, what is your experience? And again, that's no different than most procurement that happens for things outside of assessing.
Right. I love this next question. If someone is interested in becoming an assessor who has no experience, how do they get trained, educated? How do they get into the field?
Yeah. So I think I mean, this is the biggest, one of the biggest things we're seeing in, the last decade, and it's no different than the manager side or any part of municipal government. A lot of the institutional knowledge that was built up, they're retiring. There's a lot of knowledge that's leaving the profession, and a lot of new people coming in. But how do they know about it? I think all of our associations share that same sentiment. So I think the best way, you can reach out to the Mass Assessing Association. You can reach out to myself. There are programs to get people involved, aware of just different things. DLS has a whole program where we work with community colleges to bring in future municipal professionals to educate them on municipal finance. So I believe every association in the state is trying to work on this. So if anyone needs any further information, definitely feel free to reach out to me or the Massachusetts Association of Assessing Officers, and they can provide you kind of all the information you need to pursue this in the future.
Maybe our last question as we're getting towards the end. Um, uh, Looking for a little more information on breaking down new growth, what it is, and some tips you have for optimizing how best to capture any growth.
Yeah. So again, I will be an advertisement for Sean's upcoming, an article. I think we will have some very good information on, what is new growth, how is it tracking. So we do produce those types of articles, and we have a wealth of information as far as data sets on our webpage. So whether you're looking for an article to explain it, or you're looking to compare yourself to previous years or peers, there's a lot of things on the DLS webpage, so that's my plug there. As far as how to capture it, I think with assessing, you have to go out there the year that it happened. So having assessors really develop relationships with the building department, understanding the records that come in. So for real estate, I think a lot of activity comes through the building department. So making sure assessors get the permits as they're taken and it's part of their inspection process, and going out actively in the field to look at it. That's one item. Even the town or city clerk maintains records on businesses. Business certificates are filed there. So building those types of relationships, and then going out in the field. Assessors are trained, whether they know it or not. They're driving down a street, they're going to see a dumpster, they're going to see a contractor, they're going to go back to see if there's a permit there. The more that they're out in the field, they're going to notice these things as they're happening. So I would say, do not lose, do not lose that in the person or in the field. Even if you hire out, the assessor should be driving out, verifying this stuff. That field component is so important to maximize growth. Just looking at that 10-year requirement, say an office just went on the road every 10 years. They might have looked at a couple big permits, but they didn't typically go out and look at 10% every year. That permit that they took out for a front door or replace a window on the front could have turned into a huge addition on the back of the house. I've seen it. I think we've all experienced that in our careers, where they might have gone a little over what they reported. That is going to be mitigated or minimized if that assessor actually validates that out in the field. So my answer to this is getting all the data points from inside city or town hall, and then actively going out in the field and really trying to do that 10% every year is the best way to maximize that growth number.
Great. Thank you. Well, unfortunately, folks, our time together today is drawing quickly to an end. Really want to thank you all for coming. It's been really well attended. Sounds like a very important topic that folks are looking for more information on. So that's great. Would like to thank Chris for spending his time with us today and for sharing his knowledge and expertise. Also, appreciation goes out to the great staff of the MMA for organizing this informative webinar. Special thank you to Christiana Lapierre, MMA's Education and Training Coordinator. As a reminder, please fill out our evaluation form, which you can access through the link that Christiana sent in the chat. And also, heads up, this webinar has been recorded and will be posted on the MMA website and MMA on demand within the next few days, along with the slides. All attendees will receive the materials and an evaluation link via email later this week. So with that, we're going to wrap up. And thank you all for coming. Take care.